Welcome back to Fast Market Amounts Coffee alongside Kevin Hanks. It's time for Cash Tags. Joining us here in studio, TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Landon Swan is with us once again. Good morning to both of you. We're talking some Nike. Kevin and I, as we say every time, this marks the end of earnings season for us, so we're a little bit kind of, not say sad, but we get earnings coming again in a couple weeks with the banks. But I'm interested to see the data because Nike a little bit under pressure as of late.
It is, and I actually think that this makes it more attractive ahead of this report. And I do love that you all think of it as sort of the end of earnings season, because I do as well. But I think Nike is probably, arguably, one of the biggest reports of the week, and they have a lot going for them. They have lean inventories, which have really produced solid gross margins for this company. Plus, we're seeing the fact that athletic momentum has not really slowed, and you can see this reflected in some of its peers' reports. Lululemon and Foot Locker have already reported this quarter, which have really just shown that this athleisure trend is one that might be here to stay. And that was, of course, accelerated by the pandemic and so many people working from home. But what is so interesting about Nike is their reports lately have just been such astronomical beats. I mean, they announced a 96% sales spike back in June, which a lot of it had to do with some of these depressed year-ago comparisons, but still, they blew past the street's expectations. So management is now targeting gross margins actually closer to Lululemon's 58% level instead of its mid-40 level they've seen over the past few years. But with their sort of historical momentum of strong earnings, that fares well going into this report. Now, there are some global concerns. Like Alex mentioned, the stock has seen some turmoil as of late, and I think a lot of it has to do with the fact that there is a lot of exposure to Asia in Nike, and I think that there's been increased restrictions, increased lockdowns, namely actually in Vietnam, which Nike sources most of its shoes from Vietnam and derives about 55% of its total revenue from its shoes. So any hiccups there in Vietnam could be a potential impact for Nike. Plus, sort of an industry-wide headwind is that we're seeing big cost spikes with raw materials, transportation, and labor expenses, which I don't think Nike is entirely immune from, although it has had very, very strong historical reports. Now, Twitter is a little bit more bullish on the report, less bullish on Nike's outlook, which I thought was interesting. It seems like the consensus was that this will be a good report, but going forward is, of course, the ongoing concern. So that brings me to our first tweet of the day, which says, Nike last earnings report, this exploded. They have earnings this week. Seems like it might go to 150. I would not be shocked if magically now they sell off Nike after earnings release, but who knows? And, that I thought that was interesting. I saw this tweet basically 6 different times, sort of echoing the same sentiment. And I think that is a very interesting, idea, that the fact that Nike, maybe expectations have gotten ahead of itself. And our next tweet sort of talks about also these concerns with maybe expectations just being too high, which says, taking out a similar position in Nike, generally concerned about their margins. There are also the logistical supply chain issues with China and Vietnam, but resiliency over the last year and a similar Lululemon trajectory draw me in. So I will say there is sort of the two different cases here, Landon, where you see Lulu and Foot Locker and some of these other athletic retailers have had very strong reports. But then there is this concern of if their guidance disappoints, I think even in the slightest, the stock could see some downward movement. So I am very curious about your data on Nike. I think this is a company that all 4 of us really like.
Absolutely. Yeah, I love the company. And what's interesting is how strong earnings are expected to be. And that's always kind of a dangerous situation as an investor if you're bullish, because, how high do you have to hit in order to achieve what analysts are expecting? Because you can have a blowout earnings, and we've all been there, where you're long on a stock. They do really well. They beat on earnings. They beat on revenue. They raise guidance, and the stock sells off. It's infuriating. But if expectations are just too high, then that's very possible. One of the things that we look at LikeFolio with Nike is how well they're doing with digital. And, obviously the pandemic changed everything. A lot of people were shopping online, and Nike was well set up, well positioned to take advantage of this. What we've seen is there was a huge increase, a surge in people using Nike.com, using their various apps. But that is also stuck around. There's a lot of stickiness. So this wasn't just a substitute where people used it for a while and then they returned to the stores. This actually got consumers to stick around. So this is kind of this is a really ugly chart for Foot Locker. This is a great chart for Nike. And so Nike's holding on to those digital mentions, people talking about using their app, using their website, which of course are higher margin. They can go around those suppliers. I'm sorry, go around the distributors. So doing really well there. But when we look at Nike versus its peers, on the scatter plot that we love to share with you guys, it's kind of just okay. I mean, they're beating Adidas right now, but they're losing to Skechers, Under Armour, and PUMA, which obviously are much smaller, indicated by the size of the dot. But you want to be on the right side of this chart. That's where the purchase intent growth comes from. You want to be on the top part of this chart. That's where the happiness is. So Nike's lagging a little bit here, but they're a huge company, and they've obviously done very well in the past on earnings reports. Expectations are super high. The only thing that kind of throws a wrench into things is how much they've sold off. I mean, if they were at all-time highs, soaring higher, and everyone's talking about how they're absolutely going to crush earnings, then it would be pretty easy for a contrarian to take a little bit of a bearish lean on this. But they've sold off a lot over the last little bit. Over the last, 2 months or so from highs, and they are coming back to that sort of 150 area where they gapped up to on the previous earnings. And so I think that's a key level, and I'm going to be really interested to see what happens on this earnings report. It does sort of mark the end of earnings, and we've had a good one with LikeFolio, and I'm really interested to see what happens. But just the fact that they've sold off so much tells me that maybe expectations aren't that high despite what's being printed. So I'd love to hear you guys take on that.
Landon, I understand what you're saying because you deal in common sense and you deal in data, but look at the comps in terms of look at the comps and look at what Lululemon did after earnings. Look at what Under Armour did after earnings. Look at what Dick's did after earnings. Look at all these athletic apparel companies, even Gap did well. So the fact that this is my opinion, of course, the fact that Nike has sold off with the overall market and a couple other things, and there are questions about the supply chain and the logistics and their guidance going forward. But the demand for this company is just so gigantic that I think this sell-off here is pretty much a gift to traders. And this is Kevin sliding chips all in. Now, we can prepare for whatever, but knowing what I know and trading these names as they moved up, and Skechers was a great comp to some of these footwear apparel companies. It's really, I have a hard time being anything but bullish. So therefore, Landon, your job during this thing, and this is the same kind of, I feel like we're having the same conversation, except yesterday was Darden, today's Nike. You got to convince me that I shouldn't be unbelievably bullish on this name.
Yeah, so you know what? Let's go back to Peloton, Zoom, and Chewy, right? Those were the sort of COVID darlings. Everything fell into their lap, and then one after another, they didn't report on the same day. One after another, they came in and just got hammered by Wall Street because it was pull forward demand that wasn't super sticky. And we saw that in the data, and every single time we bet heavy bearish against them, and we were right. So I could be overthinking this on the contrarian side and saying, well, just because, the expectations are high and all the shoe makers killed it, so of course Nike's going to kill it, so expectations are too high. But again, it's the same thing as those other three where, we expected them to get crushed, and they did. So maybe this is just a case of, yeah, it's obvious, but with the stock being so cheap relative to what it is a gift. Right. I mean, it's a completely different story with the stock where it is now versus all-time highs. And the fact that it almost seems too easy. All their competitors are crushing it, and everyone's making money in athletics and shoe wear. So why wouldn't Nike? Of course they will. Everyone expects a big number. So Kevin, I'm kind of with you on this. I have a little bit of a contrarian slant, but that didn't cause me to, lighten my load on the bearish side on all those other three plays. So why would I do so on Nike? So I kind of agree with you here. I'm a little concerned that, on that scatter plot, Skechers is further off to the right. So we expect them to do better, relatively speaking, on revenue growth versus Nike. But still, I mean, this chart says this stock is on sale big time. And of course, you can't ignore that massive gap up that they had not too long ago. So there's always the scary gap fill and all that, but I just don't see them coming out with bad numbers here. They're going to come out with good numbers. It's just how analysts and investors react to that versus what they were expecting.
So I think we're all in agreement here, because I think that this is a name it's very difficult to go against, because they've sort of proven to us time and time again that they report strong results. And I think that a lot right now, any company that has any exposure to China is just getting crushed. And I think it's completely overblown, but that's of course just my opinion. But Landon, in terms of comparing this on a happiness scale, I mean, how can we even compare Nike to PUMA? You know, I mean, I didn't even know they still sold Pumas, first of all.
No, I hear you. It's tough because Nike's got so many divisions. I mean, we could break it down into all the different sports that they do, break it down into golf and football and basketball and just, athleisure and all that. It's just, it's a tough comparison. We're trying to pull in companies that sort of relate. Now, with all those that are in there, Nike is a little bit lower. But again, that's one of the reasons that we put the size comparison in, right? Like Puma's a tiny little dot on the gigantic dot of Nike. So I agree that's a little bit tough. Overall, I think the industry is doing very well. I think that Nike is doing well in that stickiness. I want to go back to that on the digital mentions. That's a game changer for them. The margins are much better. They can control their product, control the pricing much better. And it's very bad news for a company like Foot Locker long term. But the fact that people were forced into buying online and they stuck around, that's something that we didn't see with those other names that I mentioned, like the Chewies and the Peloton and Zoom. They're forced into it, but then they kind of went away from it. Nike's getting that stickiness factor, which is huge.
Landon, for the sake of the conversation, where would Lululemon fall on this scatter plot?
I had to look that up real quick. I'm actually not sure right now. Off the top of my head, I think that Lulu is actually doing a little bit better than Nike on both purchase intent and happiness. Just again, off the top of my head, I believe that's the case. I believe they'd fall somewhere in around Skechers where they're at right now.
Cool. Question though, then let's compare this just from the stock trading standpoint, because you've talked about the numbers are expected to be pretty strong. We've seen a lot of its peers do strong. So in many ways, this is kind of a conversation that the market has had with many of these companies. Nike's going to be late to giving this news. Where I think things get more interesting is you have it $16 now off the highs, but you mentioned the gap up. And you look at a stock even earlier this week in Adobe, objectively, that report was strong. The guidance was raised. It was a beat across the board, and the stock got clobbered post-earnings. Then you look at a name like FedEx that we talked about as well, and it had a little bit of cost pressures. So if Nike is going to have this kind of weak part of the report, to me, it's going to come from some of those cost pressures and some of those supply chain constraints that Jenny mentioned, and the market doesn't seem to be giving the passes that it was 6 months ago.
That's a great point. So you have to think about what's known and what's unknown when you come into an earnings report. And what's known may be that Nike has a lot of revenue, they're crushing it on sales, and the unknown may be costs or other unforeseen things in the future, which analysts are going to dive into on that call. So, at LikeFolio, we try to figure out what is the unknown, what advantage do we have information-wise on the market, because in theory, the market is perfect and that there's unlimited information out there and everybody knows the same thing. Of course, that's not the case. There's a lot of ways of diving in. That's what hedge funds try to do all the time. That's what we do as a data provider. So that's the question that everyone has to answer. Our data says that purchase intent and happiness are slowing down just a little bit. There's a small concern. We do that -100 to +100 score. This is a -24. It is very slightly bearish. I would say very close to neutral. But the fact that the stock has pulled back so much would make me kind of be completely sidelines on this one. So what is the unknown? I think people have to answer that question, and how might that impact things? So Alex, I think you're absolutely right in setting that up that way. And the scary thing for me being, if I was long going into this, the scary thing would be looking at that chart saying, wow, Nike can move that much on earnings, because before that last move, Nike was a very, pretty conservative when it moved. 4, 5, 6%, maybe nothing like that. So that was a very large move, and concerning in the fact that it could go the other way. Now, again, I agree with Kevin. I think they're going to blow out numbers. I think they're going to do really well. But you have to think about what's the unknown. And I think the known is high revenue, high sales.
Good stuff. Landon Swan, thanks as always for joining us, the co-founder of LikeFolio.com. Jenny,